Nona, nice to have you with us, Nona Peltier. Fletcher Building surprised the market with a $750 million capital raising and plans to sell a couple of big assets. Boy, we keep talking about Fletcher Building, don't we?
Well, they are under pressure to get things right, and this might just put them on the right path. We still haven't heard exactly what they're going to do going forward because the strategic plan that they are going to announce in June is yet to be revealed. But today they did put their balance sheet in order. So earlier this year, we heard from the new chief executive who talked about where their losses were going to be with the building and interiors business, about $1 billion all up. How were they going to address that? They've come out today and said, okay, we're going to raise money through a sale of shares. Those now what they're doing is they're basically offering the shares at quite a good discount to the last traded price, 23%. So that kind of basically gives the existing shareholders a very strong incentive to take up this offer, because if their share price will be diluted if they don't, and it's quite a good deal. So we did see some changes in the market today as a result of that. $750 million, that's a lot of money.
That's a hell of a lot, yeah.
And they're going to sell a couple of their businesses too. These are their international businesses. They're going to keep the ones that are in New Zealand and Australia. That's going to be the focus of the business, so that's a bit of a hint of where they're going. But they're selling their roofing tile business and their Formica business, which has operations in North America, Europe, and China. So that's going, we don't know what that's going to be. It's going to take some time to sell them. Those assets are worth a lot of money. It remains to be seen how much of that will be used to repay debt. But in the meantime, this $750 million is going to happen this week. They're in a trading halt right now, and that has had an impact on our market. We've dropped 0.75%, that's 62 points. Now that's at a time when the markets generally are fairly little changed in the rest of the region. And what that is really investors moving their money around to take advantage of this particular offer. So we're seeing that, and that explains one thing.
That's the markets. Just tell us what the dollar is, and then we'll go and talk about the other thing.
Well, now, interestingly, the dollar was little changed against most of its currencies, but it did change against the Brexit, and that's because the pound is moved.
Against the Brexit.
Oh, sorry.
Against the euro.
Now you look what you've done.
Well, no, it's a Freudian error.
Yes, it's against the pound because of the Brexit.
Right.
So it's the pound is now at the highest point it's been since the referendum to separate from Europe. The European Union. And as a result of that, now the reason you might ask is because now people think that the Brits are going to do a better deal than they expected, and that the European...
So these are the same people who were in the markets predicting that Brexit wouldn't happen, right? These are the same, right?
Must be the same people.
How are they going reading the tea
and
leaves?
also the Bank of England may hike interest rates, so that's the reason why the pound, not the Brexit, the pound has moved, yes. So.
Very quickly, because we've got a lot to jam in all of a sudden.
Sorry, okay.
New Real Estate Institute data shows prices are up, but sales are down.
Yeah, well, that's the old story, just to make it very brief, and that is because we don't have enough supply in some of the key markets, and specifically Wellington. They really are struggling. Yeah. We've known the story about Auckland for a while. It's starting to spread.
Nona Peltier, business reporter, thank you very much indeed.